Cough. I'm still getting over a cough, so just bear with me. All right. So, when going over the basics for me, going over NASDAQ is important because that's what I trade. So, it's important to know what you are trading. All right. So, NAS 100 is a stock market index which is made up of 100 companies that are mainly technology. So I like to pay attention to the top companies within NASDAQ on CNBC NAS 100, which are Apple, Microsoft, Amazon, Meta Platforms, Tesla, Alphabet Class A and B. I believe it's A and C, but I have to double check. Nvidia, Adobe, and Pepsi. All right. So I'm going to show you exactly where you can do that. So you're going to go open up a separate tab. All you have to do is type in CNBC NAS 100, and it'll typically be the first one. And what comes up is a list of companies. I like to do it in alphabetical order, and I can see, okay, Adobe is red, Alphabet Class A and C are red, Amazon is red, Apple is red. And then go down to Meta Platforms is red, Microsoft is red, Netflix and Nvidia are red, Pepsi is red, and Tesla is red. So most of the companies are red. So if I'm looking for sells, then this just kind of confirms my confluences even more. All right. I also like to keep track of any major USD news that is coming out. So I use forexfactory.com. It doesn't matter what market you trade in. Forexfactory.com is not just for Forex, right? So here I have forexfactory.com saved. You can see that tomorrow's Wednesday. This is CST time. So I see that before opening bell, I have high impact news. And I have high and medium impact news. And then after opening bell, I have medium and high impact news. Now, if you click this green button here, you can schedule out or you can section off impacted news. So I don't care about yellow folders because they do nothing. I only care about the USD because that's the only one that affects NASDAQ, right? So I only want to see red, orange, and if there's like a holiday. All right. So that's forexfactory.com. The next thing I like to use to keep up with all stock market news, you can use investing.com, MarketWatch, or Bloomberg. They all do the same thing. So at that point, it's personal preference. I personally like to use investing.com. You can type in what you want news on, right? So if it's just NASDAQ, you would go here, you would click news. And it'll show you any articles that are connected to what you're looking for. All right, drop a 4 in the chat if this makes sense so far. And if you have any questions, go ahead and type it out. All right, looks like everybody's dropping a 4, so no questions. And if you guys think of any questions, you can always type them in the chat. All right, so I found that my favorite time to trade NASDAQ is opening bell, which is New York session. 8:30 a.m. CST. And somebody asked, can you show how to change the folders again? Yes, so you go to forexfactory.com. You're going to click this green button on the right-hand side, and then you can adjust if you want all, none, and then you can pick which one you want and apply filter. All right. Hopefully that answered your question. Yeah, no problem. All right, so my favorite time to trade NASDAQ is 8:30 a.m. CST, which is opening bell. Aside from that time, I think New York session gives more consistent moves than London, but there are times London will give moves as well. So key times to pay attention to when trading indices period is 8:30 a.m. CST, which is opening bell, along with 8:45 to 9 a.m. CST, and then 10 a.m. CST. All right, so those are my favorite times or time frame to trade NASDAQ, right? But that doesn't mean that London session doesn't give opportunities. This is just personally my favorite time. Now, the confluences that make up my strategy are order block rejections, breaker block rejections, failed swing lines, buy and sell stop liquidity, and imbalance. Okay, that is what make up my strategy. So let me show you what each one of those look like briefly. Why does it want me to fill out an agreement? Sorry, guys, give me a moment. Okay, hold on. TradingView wants me to do something that didn't realize. Let me just try to type it in again. Okay. Give me a moment. All right. So first I will show you. Okay. It wants me to fill this out. It is very, let me just use FX Replay. This is just a back testing software. I'm just going to use it to show you things on the chart. So give me a moment. All right, here we go. All right. So the first thing on my list was an order block rejection. All right. So there are three different types of order block. You have your bullish order block, you have your bearish order block, and you have your breaker block. All right. So the first one I will do is my bullish order block. All right. So a bullish order block is the last down candle before bullish momentum. You draw the box around the last down candle, right? And it can only be an order block if it has true momentum. So clearly, this is the last down candle, and this is the momentum. You wait for price to trade back into these areas for buy entries. All right, so that is the bullish order block. I use these for entries. All right. Something else that you will see me use is a bearish order block. A bearish order block is the last up candle before bearish momentum. You draw the box around the last down candle or up candle before the bearish momentum. So here's the last up candle. Here's that bearish momentum. You wait for price to trade back into it for sell entries. Okay. Now there are three different ways you can draw an order block. You can draw an order block from, let's say, you could draw it from body to body, like this, top of the candlestick body to the bottom of the candlestick body. Or you can draw it from body to wick. Notice how I included the wick. Notice how I included the wick here. Or you could draw order blocks from wick to wick. It all depends on the size of the candlestick body and the size of the candlestick wicks, right? We're not going to go too into detail on that because that'll be in our next boot camp call in my community. But that is the basics of a bullish order block and a bearish order block. So again, you wait for bullish order blocks, the last down candle before the up move, wait for price to trade into it for buy entries as it's rejecting the top of the box. For bearish order blocks, it is the last up candle before the down move. You wait for price to trade into it for sell entries as it rejects the bottom of the box. Okay? Then you have something called breaker blocks. So breaker blocks are when price disrespects an order block. Okay, so let's find that. Let's find a breaker block. Here we go. So notice how this is the last down candle before bullish momentum. Okay? Notice how, all right, so I'm going to draw it from the wick to wick because it's a small body and small wicks. Notice how price completely disrespected the bullish order block and closed below it. Once price closes below a bullish order block, it becomes a breaker block to look for sell entries off of. And look at that. Price came to it and started using it for sell entries. All right, so again, once a bullish order block gets disrespected, it becomes an area to look for sell entries off of. And the opposite can be said for bearish order blocks. Notice how this is a bearish order block. It's the last up candle before a down move. As soon as price closed above it, it disrespected it and became an area to look for buys off of. How is it disrespected? Because it closed above it. For bearish order blocks, it's disrespected when price closes above it. For bullish order blocks, it's disrespected when price closes below it. All right, let's put a 5 in the chat if that makes sense. And if you have any questions, feel free to ask now. Again, I will be doing more in-depth calls in the boot camp. This is just boot camp day 1, so I'm just going over the basics of what you can expect in the strategy. All right, perfect. All right, so the next thing I had on my list is a failed swing line. So everybody should know what higher highs and higher lows are and lower lows and lower highs. Well, right here, I could say price is failing to swing lower. The reason why, or I can even say starting from here, right? So here we have a low, the blue box, the blue candle is the low. You see these blue candles here struggle to close below this blue candle, meaning that price is failing to swing lower than this area. Well, here is another low, and this low is struggling to close below this low. We have another low here, this low struggling to close below this low and this low here. Then we have this low here struggling to close below this low, meaning price is failing to swing lower. When price is failing to swing lower, that means price is buying. Okay? And the same thing can be said for sells. When price is failing to swing higher, we can say price is selling. All right? So if we just take this little area here as an example, this is a high. This high, which is the gray candle, failed the swing, which means it failed to close higher than this high. Then this high failed to close higher than this high. Then this high failed to close higher than this high. Therefore, price is selling. Okay, so failed to swing high and failed to swing low are pretty simple. They're just higher highs and higher lows, lower highs and lower lows. All right, put a 3 in the chat if this makes sense. And if you have any questions, let me know now. What if it breaks and closes above? Then you have exactly what you said. It broke and closed above, meaning we may have a trend reversal, right? Because look at this. Price stopped failing to swing higher, and it actually continued to make equal highs. Well, that gets us into what we're talking about next. Buy and sell stop liquidity. Buy stop liquidity is an area where buyers are struggling to break multiple times. Notice how buyers are struggling to break this area multiple times. That lets us know liquidity resides above and price may be drawn into the area above. Now, when you have an area where sellers are being stopped multiple times, right? And remember, it's never one price point, it's an area. The area, sellers are struggling to close below the area. Buyers here are struggling to close above the area. This lets us know liquidity resides below. Now, just because you have seller buy stop liquidity doesn't mean price has to go and take it right away. Especially on higher time frames, buy and sell stop liquidity tends to take longer to take. Well, in this case, price was failing to swing higher, But as soon as it started to create equal highs here, creating buy stop liquidity, we knew that price was breaking that structure. Okay? Once price closes above a buy stop liquidity area, okay, somebody said in this example, how can you tell liquidity is below or above? Because of buy and sell stop liquidity. Literally what it sounds like. So let me show you. This area, buyers are struggling to break multiple times. Does everybody see that? Buyers are struggling to close above the area. That means there's buy stop liquidity, meaning there's liquidity above. But in this case, there's also sell stop liquidity. Sellers are struggling to close below the area. So how do you know if there's buyers or sell stop liquidity above or below? Watch price action. Is price stopping at a certain area and struggling to break it, meaning it's struggling to close above or below it? Not struggling to wick above or below it, because it clearly wicked above and it clearly wicked below. It's all about the close of the candle. All right. So I can say here, once price closes above an area, liquidity has been taken. All right. And once price closes below an area, liquidity has been taken. Notice how long it took for this sell stop liquidity to be taken. That is a reminder that you cannot enter trades based off one confluence. I'm showing you each of these confluences separately, but I use them all collectively to enter into trades. Okay? Again, this is just the basics video class. So I'm just showing you what we're going to be breaking down in each class in later lessons. Okay? I'm just telling you guys the basics of it. All right. The last one we have is imbalance. So imbalance is a strong impulsive move, one to the upside of the market with little to no sellers involved. Notice how this is a strong impulsive move to the upside of the market and there's really no long wicks sticking out of it. There's little to no sellers involved. Therefore, price created imbalance in the market, which creates a gap that price may want to go and fill. As you can see here, it was filled over here. Bullish imbalance can be filled with sellers. Okay? The same thing can be said for bearish imbalance. All right? So let's find bearish imbalance. Here we go. This is a strong impulsive move to the downside of the market. Notice how it has little to no buyers involved. Then you could see here that imbalance was filled. Bearish imbalance can only be filled with buyers, right? So if we put all that I just put together into one, this is how it would work. So let's see. Let's say let me find one that has all the confluences together. I want to find the cleanest example possible for you guys. Okay. Here I could see, okay, price is failing to swing. There's an order block here. Yes, price swung lower than this one here, but I see there's multiple rejections off the order block. So if I didn't trust this entry, I could get a conservative entry here because price is now failing to swing lower. This area, buyers are being stopped multiple times, more than 3 times at least. You want it to stop more than 3 times. That lets me know there's liquidity above price. Not only that, there's also imbalance to fill here that can only be filled with buyers. So why would I enter this trade? One, price is failing to swing below this area here. Two, there's buy stop liquidity above price. Three, there's imbalance to fill. And last, it would be an order block rejection for entry. All right. Put a 1 in the chat if this makes sense. And if you have any questions, let me know. Questions or comments? You did have a question about liquidity, and I already answered that question. In that example, how can you tell the liquidity is below or above? By price struggling to close below or above the area. I answered that question as soon as I saw it. The imbalance is the whole candle or it's the wick from the first candle to the last. The imbalance is you want to have little to no wicks in imbalance. The imbalance in this case is just this candle right here. This is the strong impulsive move. This has a huge wick sticking out of it. So buyers were clearly involved in that candle. Imbalance is a strong impulsive move to the down or the upside of the market with little to no buyers or sellers involved. So, like this candle here is the imbalance because this is the candle that has little to no sellers involved. How do you know it has little to no sellers involved? Based on the wick. There's little to no wick attached to that candle. Okay. I hope that answered the question. Your teaching is priceless, so much appreciation. Breaker block is the most challenging for me still. And breaker block takes time. Um, so just keep practicing, right? What I can tell you guys is when we're in a strong sell market, really pay attention to breaker blocks on the 15-minute time frame. All right. Now, order all this that I showed you guys can be found on literally any time frame. So regardless if you're a swing trader, scalper, intraday trader, you can use these confluences. All right. And thank you, Shiloh. I appreciate that. Yeah, breaker blocks definitely is game changing for providing more entry opportunities. So if there's a long wick, we can't consider it as imbalance. I don't consider imbalance with it having a long wick because that tells me that the other side of the market was very much involved. So the way I trade imbalance, no, I don't consider that. For scalping, what time frames would you suggest to start on top down? Probably the 30 or the 15, right? Because you want to keep going lower. So you don't really need to start on the higher time frames for scalping. You can use this strategy for swing and you can use it on anything. Some of my students don't only trade NASDAQ, right? But for me, the time frames that I use as an intraday trader, I start on the daily and then I scale down going to the 4 hour, the 1 hour, the 30 minute. I typically go no lower than the 15 minute. There are times I need to use the 5 minute if I don't see anything, but that's very rare. I typically use the 30 or the 15 minute as my entry time frames. If you mind, can you show another example of a breaker block? What is scalping? Scalping is pretty much a trader that likes to get in the market quickly. Let me see. I don't think I have an example, or I don't think I've talked about it here. But yeah, it's pretty much just a trader that likes to use the lower time frames and be in and out the market very quickly. All right. Somebody asked for an example of a breaker block. So let's find one. Hmm. Try to find a clean one. I want to find a nice and clean one. All right. Let's see. Well, I am only on the 1 hour. I could go to a different time frame and look for one. Right. So I'm looking okay, here we go. Here we have the last down candle before bullish momentum. As soon as price closed below it, it became a breaker block because it disrespected the bullish order block. You want to wait for price to trade back into the area for now sells for possible entries. All right, so think of it as bullish OB turned breaker equals look for sells. And then bearish OB turned breaker equals look for buys. Okay? So this was a bullish order block. At first, we were looking for buys, but as soon as price closed below it, it let us know that price is selling, or not that price is selling, but it let us know the order block is not respected and to watch for possible sell entries. And as you can see, it rejected the area multiple times for sell entries. All right. Now, the same thing can be said for bearish order blocks. Look at here. This is the last up candle before bearish momentum. As soon as price closed above it, it became an area to watch out for buys. And then look at that. It rejected the area twice for buy entries. Okay. Have I swung before? I do not like swinging. I swung probably my first or second year of trading. I'm not a swing trader. I'm not opposed to swing trading. If it works for you, do what works for you. But that's not what I do. Right? Got to do what works for you. All right. Any questions? Threes in the chat. Okay, good, Kevin. I'm glad I answered your question. All right. We'll keep it going just because we're running short on time. All right. So the best websites for fundamentals. All right. We already went over forexfactory.com. We went over investing.com. MarketWatch is another website just like investing. And then we went over CNBC, NAS 100. Now, contract sizes. When it comes to futures, regardless of what broker or prop firm you are using, the contract size don't change. All right. So you need whatever you're trading, you can go to cmegroup.com and you can figure out what your asset contract size is worth. NASDAQ has two different contract options. It has the MNQ, which is micro NASDAQ, and NQ, which is the mini NASDAQ. Remember, mini contracts are always bigger than micros. The asset you are trading will determine how much the contract is worth. So these contracts are only for NASDAQ. The MNQ is $2 per contract for every 1 point. If I place a trade with 3 contracts and I have 50-point stop loss and take profit with an MNQ, I'm risking 300 or making 300. Now the NQ, which is the mini NASDAQ, it's $20 per point for per contract for every 1 point. So if I trade with 3 contracts and I have a 50-point stop loss and take profit, I'm at risk of losing 3,000 or making 3,000. Okay, so that's the contract breakdown for NASDAQ futures. All right. Now oops, is there a question? I always think that mini is smaller than micro. Yeah, no, so micro is actually the smaller one. And yes, just like it states here, when it comes to futures, regardless of what broker or prop firm you are using, the contract size doesn't change. So I know for those of us that came from Forex or have traded Forex, we know that certain brokers may have different lot sizes for certain things that we trade. That is not the case with futures. It stays the same all across the board. All right. Now, lot size trading and indices. When it comes to trading NASDAQ and Forex, most brokers are the same now. So on most brokers, a 0.01 is true to itself, meaning it's 10 cents per point. And a 0.1 is $1 per point, even when trading indices. Okay. And then, as you know, there's a wide variety of lot sizes for indices for Forex. Now, the most popular contracts for trading indices, let's say you guys want to trade something else besides NASDAQ. Popular ones are E-mini S&P 500, which is $50 per point for 1 contract. There's the micro E-mini S&P 500, which is $5 per point for 1 contract. You have the E-mini Dow Jones, which is US 30, which is $5 per point for 1 contract. Then you have the micro E-mini Dow Jones, which is 50 cents per point for 1 contract, which is also US 30. Then you have the Nikkei USD, which is also an indice, but it only has 1 contract type and it's $25 per point. You can find all this out on cmegroup.com. All right. Trading hours. The market is open 24 hours a day, 6 days a week. Indices have a 1 hour and 15-minute break each day. Market open is considered from 8:30 a.m. to 10:30 a.m. and is the most liquid session, all right? And it is called the US and Euro overlap, which can extend to 12 p.m. each day. This is for, I believe this is CST time. I should have put it. All right. Volume picks up around 3 p.m. and the US closes from right after that at 4 p.m. All right, 1 to 3 p.m. is the most liquid part of the afternoon as professional traders balance their books into the close. There's also typically a lot of news during this time, so pay attention to that as well. The last 20 minutes or so into 3 p.m. has high volume. There is an evening session with decent volume and opportunity when trading London session overlaps with the Asian session from 1 a.m. Volume means more opportunity, so make sure to be in the market when it's best. Mercy, my signal for NASDAQ on the broker is NAS USD. The price value is different, but the movement is the same. Please speak to that. You spoke to it right there. The movement is the same. Doesn't matter if the price value is different. Price value is always based on what broker you use, but it doesn't matter because the movement is the same. So if I take a trade on my Forex account and my futures account, the numbers are going to be different, but the movement is the same. I only use a 50-point stop loss, so I know that regardless, wherever I entered the trade, I'm just going to move my stop loss 50 points. But don't let the price value mix you up. Focus on the price movement. If the price movement is the same, then you don't have to be confused. It's correct, right? You may just have to do some adjusting when it comes to take profits and such things like that. But other than that, the price movement is the same, and that's what matters the most. All right. I get that question quite often too, so you're not alone. You're not the only one. What broker do you use for Forex? I'm on Top Step for futures, but don't know what Forex prop to use. So I use Plexi Trades. I believe I have it in my community in the announcements. Haven't really been doing the Forex challenge, but let me see. It should be here. Yep, here it is. All right, so here is the link to the Forex broker. It's called Plexi Trades. You won't see the US on there, but you could just put other. But that is the broker I would use for Forex. And I wouldn't do any Forex prop firms. I also wouldn't put a lot of money into a unregulated Forex account. If you're trading with more than $1,000, you should be trading futures, but I would use Forex for small account builds. All right. And if you don't want it to have anything to do with Forex, that's also okay. Yeah, I prefer futures as well. But if you ever want to challenge yourself and do a small account build, then that's the broker you could use. Because you can't do small account builds on futures. All right. So indices can be traded in either the Forex or the futures market. Speaking of that, the difference is in Forex, and this is for US traders. So if you're not in the US, this doesn't apply to you. In Forex, you can trade indices using something called CDFs, which stands for contract for difference. Okay? CDF trading allows you to take a position on the price of an instrument without owning the underlying asset. In short, because of this, trading indices in the Forex market is not regulated, which is why MT4 and MT5 are cracking down on letting brokers who allow you to trade CDFs use their platform. Now, the futures market offers direct contracts to indices like the S&P, NASDAQ, and Dow Jones, which is US 30. Being able to trade them directly means that it is regulated to trade in indices in the futures market, making it safer and more reliable, okay, for US traders. Now, brokers to use, I already linked Plexi Trades for you guys. Future brokers, you can use Tradeovate. That's the one that I like to use. You can trade directly from TradingView. TradeStation also lets you trade directly from TradingView. There's NinjaTrader. That has its own separate platform. I don't use NinjaTrader. Haven't learned the platform. If that's something you're interested in, There's plenty of YouTube videos that will help you get started on NinjaTrader. All right. Now, future prop firms, there's Apex. They're typically the cheapest, but I don't like their payout system. Top Step is my favorite because they have a platform called Top Step X that gives you a free trade copier. Take Profit Trader has a really good payout system, and I've heard really good things about my funded futures as well. Okay. Any questions? Put a 5 in the chat if you have no questions, and if you do, go ahead and type it while I read this fun fact. When filing taxes for futures, it can be considered capital gain, which means you are subject to lower tax rates, while Forex is taxed like regular income and subject to regular tax rates. There are no spreads in futures, while the spreads for Forex vary depending on your broker. Spread is the difference between a Forex broker's sell rate and buy rate. Spreads can be narrower or wider depending on the index involved and the time of day. All right. Other than that, you guys, do you still trade Nikki at night? No, I do not. Do you mind going back to the screen of the list of everything you went over? What screen was that? You're talking about this screen right here? About the tax, do you recommend opening an escort to lower tax? I would talk to I would get a financial advisor and talk to them or hire somebody. But you don't have to open an escort to lower the tax. I would talk to them because it really just depends on your personal situation, your job, how much you're making with your job, if you have a job, if you're getting unemployment. There's so many things, and that is not my cup of tea. I would hire somebody to help you with that. I hate math, and as soon as a bunch of numbers start coming, I'm like, all right, somebody can take that. Okay, no problem. And go ahead and ask your one more question. And while he's doing that, does anybody have any more questions for me before we end the call? Just go ahead and let's do sevens in the chat if you have no more questions and you're all good to go. Will this be on YouTube? Yeah, I'll post this on YouTube. So this call, typically it was only going to be for my community, but I wanted to make it to the public so those that are interested in the community can see kind of what goes on every week. What's the difference between your ebook volume 1 and 2 and your course? Ebook volume 1 has more basic definitions. Ebook volume 2 has more up-to-date take profit methods and examples. And my course is pre-recorded and it's a step-by-step guide on how I trade. What do you think about ICT concepts? I use some of them, I'm pretty sure. At this point, there's so many different ICT concepts. I learned it about 3 years ago now, and I kind of narrowed a lot of it down. So I use some of them, but not to the T. Okay. Um, but yeah, so for those of you that are not in the community, we do educational calls at least 1 to 2 times a week. As you can see, our call schedule, our next boot camp will be order block entries. And that'll just be for those in the community. And I update this events tab every week. So no, the course in the monthly so it's not a Discord. I actually have an actual trading community. You won't have access to the course in the community, but you will have access to over 50 recorded calls. All right, so if you go to recorded content, for those that are trying to join or are already in and don't know, you scroll down, you could see last year's boot camp, and then you could go to educational webinars. And I have loads of educational webinars to watch, right? So it really just depends if you want live sessions and the educational content, but it's not in a certain order, or if you're brand new and you need a step-by-step guide, then the course would be ideal. All right. All right. Looks like there's no more questions. All right. Well, you guys have an amazing rest of the night. Thank you guys for joining in. And if you guys have any more questions, you guys can reach me on my Telegram or my Instagram. I try to answer, but Telegram's better because I actually can see it. All right, you guys have a great night. See you guys later.